Hello, everyone, and welcome to this webinar from the Payments Association on how fintech partnerships can supercharge bank growth. My name's Fiona Jelly, and it's a pleasure to be moderating today's discussion. By way of introduction, I'm the CEO of Comply First, and having worked in compliance and management roles at banks and payment companies for many years now, I help EMIs and PIs scale by automating manual processes, including regulatory reporting, setup reporting, agent distributor reporting, and SAR reporting. So that's enough about me. Let me say I'm super excited to facilitate today's discussion on how fintech and bank partnerships can unlock growth. We'll discuss market trends, including the use of alternative payment methods, especially amongst the unbanked and underserved. We'll discuss how banks can use technology to better serve these markets and how partnerships between banks and fintechs can enable all of this. We'll also open up the discussion to the audience too, so you can directly feed into the conversation. So I'm going to hand it over to our panelists to introduce themselves in just a moment. But before I do, I just want to say a few things. Firstly, you can submit questions to our panel in the Q&A tab of the control panel. You can send in your questions at any time throughout the webinar, and our speakers will address them during the audience Q&A session. We're aiming for about 10 minutes of Q&A at the end. You can also ask your questions anonymously if you would like, but we prefer if you can put your name by them so our panel can contextualize the answers for you. And if you have any technical issues, please feel free to send a message in the chat box to Alana Morris from the Payments Association, and she will do her best to help you. So without further ado, let's crack on with today's discussion on how fintech and bank partnerships can enable growth. And I'd like to welcome our panelists and ask them to switch on their cameras. Great. So welcome to our panelists, Ruben, President of TerraPay, Jonathan, Head of Partnerships at Thread, and Vijay, Director of Product at Tide. I'm going to hand over to each of you now to give a quick intro on your background and your expertise. And Ruben, could we start with you, please?
Thank you, Fiona. Hello, everyone. My name is Ruben Salazar. I am the president of TerraPay. For those of you who are not familiar with TerraPay, we are the largest money movement network. A big part of our network is the connectivity to 2.5 billion wallets. Before joining TerraPay, I spent my career in Citibank, Barclays, MasterCard, and Visa. I started when I was 10 years old, so you can imagine. And it's a pleasure to be here with you. So looking forward for the conversation.
Great. Thank you very much, Ruben. Jonathan, could we ask you to give your introduction now, please?
Thank you, Fiona. Hi, my name is Jonathan Vaux. I run the partnerships and propositions team at Thread. Thread, for those who don't know, is formerly known as GPS. We're really one of the world's leading and original kind of digital card issuer processors. So it's really exciting times for us. And previously, I spent 20 years at Visa, including running the innovation centers for Europe. And prior to that, 10 years at American Express. So lovely to be here. Thank you for having me.
Super. Thank you very much, Jonathan. And Vijay, over to you.
Thanks, Fiona. I'm Vijay. I just joined Tide a couple of months back. Previously, I used to be in PayPal. I hope you guys don't need introduction on PayPal, but what we do in Tide is we hold 11% of market share in MSMEs in the UK. We just started our operations in Germany, and we have a fair presence in India as well. So it's an upcoming fintech in India. So Tide does support a lot of MSMEs, and I think I'm so excited about this topic with my fellow panelists, because Tide doesn't do anything without partnerships with other players and other banks. So I'm excited. Thank you.
Brilliant. Well, thank you to all of our panelists for those introductions there. I'd like to start the conversation by asking the panel about recent changes in customer behaviours with respect to banking services and the increasing popularity of digital wallets. Can you talk to us about these trends and the drivers behind them, please, Jonathan?
Hi, yes, delighted to. So I think if you look at banking 20 years ago, and when, the way banks run would be they'd have branch networks and they'd have fairly fixed processes, pretty standard products, which were all built in fairly rigid technology stacks. So it was fairly consistent and homogeneous across them. When the internet came along, you started seeing online banking, but banks just really saw that as a distribution channel for selling the same products. But also, I think customer service, if you think of something like a statement, you would just see exactly what you saw in a paper statement, but presented on your laptop or your PC screen. I think what really changed everything was the mobile device. And so what you had there was banking became more of an app. And so you had lots of new entrants, such as Monzo or Revolut or Starling in the UK, who were offering a new form of digital banking. And what they would do is really change the front end customer experience. And then so what you saw was those are often for niche services such as foreign currency, parent, child. But what we often found was that customers still retained their original underlying bank, but what they were starting to do was use the app for more convenient and better customer experience. Now, at the same time, you had the Apple Pays and things like that emerging. And so what you have seen is really the digitization and development of new products and services around using things like digital wallet infrastructure for sending out payments, rewards programs. But I think where we've seen, so I think most people are familiar with that, but where I think we've seen really fundamental change is in those areas or propositions where, frankly, banking was not offering a good service. And so if you take an example of small businesses, I'd say that they tended to get treated either as a sort of slightly tweaked consumer proposition or a slightly tweaked commercial proposition, but it wasn't really great. And things like online processes and application processes really struggled. And another example with some of the TerraPay play a huge role is in things like cross-border payments. If you think how complicated it is to send money overseas in an age when we see people using WhatsApp to make global calls or sending messages, the complexity, the lack of transparency of things like sending money overseas was a real problem. So what I think we've had is really innovative organizations such as TerraPay, such as Tide in the small business segment, where they have really looked at developing very specific programs and products and services, largely using cloud infrastructure to offer far more flexible and much more tailored needs. And I think the banks have really struggled to react to that. But I do think what we've seen is a real opportunity for kind of almost democratization of access to services. The unbanked would be another example of how hard it was for some people to get a bank. So what we've seen, I think, is really interesting developments in, yes, your standard kind of consumer banking, which I think is changing, but really fundamental change in segments that were properly underserved historically.
Brilliant. Great opening on those changes in customer behaviours and trends. I'd like to throw that open to the other panelists. Do you have any comments on that?
Ruben, you're on mute.
I absolutely agree with Jonathan. I believe what we are doing, what we are facing right now is a consumer that is native in digital. No? And during the next 3 to 5 years, you're going to see the Gen X and the millennials to represent the larger workforce, and they will control the largest purchase power. And these consumers are demanding everything in digital and everything in real time. So the banking experience, the payment experience, the money movement experience need to fit in the mobile. No? And with other technologies, this is just going to accelerate. We believe that by 26 or 28, there will be more than 6 billion wallets in hands of consumers. And that will represent a dramatic shift in the way these new consumers interact with money and relate to money. The industry, the payment industry, the banking industry, we all will need to adapt to this new environment. The emergence of smart wallets that can help the consumer to manage their finance in a different way, manage their payment capabilities, their cross-border money movement capabilities will be a day-to-day necessity. And so, we are probably in one of the largest inflection point for digitization. There is still a lot of room to grow. Even in highly developed markets, there are very large pockets in markets like the US and Europe, are very large pockets of underserved, of underbanked consumers. Underbanking or underserved is not an issue only in emerging economies. It's everywhere. Today, you have some sort of disparity. There are more than 200 million individuals out there who are living outside their country of origins, and they keep sending money to more than 800 million individuals who are in low and middle income countries. But the sending individual may have full and rich access to banking, but the receiving part may not have access to banking. That's where the wallet network, we believe in TerraPay, for example, we're serving probably around 600 to 700 million individuals who their only connectivity to the digital economy is the wallet they have in their mobile. So it's an important bridge as an industry and as a collective for us to address.
Completely. And you mentioned there, Ruben, the underbanked as in that consumer trend in move towards alternative payment methods, that those alternative payment methods like digital wallets can help those who don't have access to traditional banking. Vijay, could you perhaps speak to us a little bit about that and your experience?
Sure. Like I said, in PayPal, that was one of our biggest. When I used to work for PayPal, that was one of the biggest goals PayPal as a company had. I'm sure other panelists would agree that PayPal is one of the pioneers in many of these things what we are talking about. What started off as a P2P transaction by the founders became a more interesting value proposition in many countries. And one of the things is to serve the underbanked and underserved segments. I'll give you an example: student account, right? So not many banks will offer an 18-year-old a bank account immediately. And I think it's tough, even in emerging market or in an established country. It's difficult. So what PayPal used to offer is an account to them, and then connect with their parents' account, right? So parents can fund their PayPal account, and then the students can use it for their daily expenses, for food and stuff. So as PayPal built their value proposition in POS and other things, it became so easy for students and parents to have a control over the expenses as well. So, these kind of use cases were so good and so useful for these underbanked and underserved segments. And I can quote a couple of other examples as well on the SME side. When you think of countries like Africa, where TerraPay is also heavily present, is there were a lot of small, medium enterprises, small, medium enterprises who needed to thrive, and the banks won't give them an account in the first place to even build a basic infrastructure. And we are talking about a small $100 business or $1,000 business, right? Not even more than that. So PayPal was there, right, serving them with many features. One, they had an account where others can internationally go and pay them. Two, they were giving them credit, a small credit to them where they can buy their raw materials and thrive. So I think these are two examples I wanted to give at this point, but there are multiple other examples where PayPal, and in my current company where I'm working, which is Tide, the main goal of Tide is to differentiate between a normal bank. So we are also one of the challengers bank, and we have 11% of market share, as I said before, where we give, which we help small medium enterprises thrive by giving them some niche products like invoicing, payroll for these 20, 30 member companies, where we give them these payrolls and invoicing where they can just open an account and create their own payrolls and invoicing for these customers. So I think from my perspective, fintechs are so important to the ecosystem, especially for the underbanked and underserved segments.
Thank you very much, Vijay. And the PayPal example is helpful as a case study. Ruben, I'm just going to come back to you here and ask you a bit more about how TerraPay can help banks address that underbanked segment. What specifically can you help them with?
Well, we're mainly focused in emerging economies and trying to connect these wallets to the overall banking ecosystem. Having the 2.5 billion endpoints, I mean, directly connected to these wallets, to these containers, allow us to reach, I mean, underbanked, a very large part of the underbanked and underserved population. And the ability for any bank in the origination markets, to reach the TerraPay network and then reach the wallets to disburse. This is a very powerful value proposition. Instead of visiting the bank, instead of visiting any branch, the consumers can immediately, I will say, download the funds directly in these digital containers. What we're doing is trying to eliminate the barriers of entry that may exist for more banks to get access to the TerraPay network. This week, we announced a partnership with Swift, in which we are going to develop the conditions in the same Swift message to reach the wallet network that we have been building during the last 10 years. That is only one example. I believe, and Jonathan is very familiar to this topic also, believe everybody wants to collaborate with the fintechs and everybody wants to understand how one technology enrich the other technology. But for that to happen, we need to create the conditions, the platforms to operate. If you don't have an API strategy, you don't have a way to connect the core banking system to other peripherals or other technologies that enrich your own capabilities, it's very difficult to connect, no? And so what we're doing is, besides the APIs that we are exposing, we're also connecting to other networks that can drive this traffic into the TerraPay network. This is the example of what we're trying to do with Swift. But the bottom line of all this is wallets are becoming a crucial part of how the individual will perform banking and will relate to money going forward. And those are numbers that we cannot ignore. I mean, we have to develop the proper conditions and the proper strategies to start interacting with these wallets around the world.
Completely. And I think the FCA's consultation, which they published last week, they're estimating that up to 50% of UK adults are using at least one digital wallet at the moment. So, you know, it is undeniable. Before we move on to talking about creating those conditions that you were talking about for banks and fintechs to work together, I'm conscious that we've talked a good bit about consumers, but I want to ask, are there any other customer groups that are potentially impacted by our discussions? I'm thinking businesses potentially. Jonathan, can I get your take on that?
Yeah, as I mentioned earlier, I think probably as a group, small businesses would have been the most fundamentally affected by this. So if I take as an example, Ruben and I were both at Visa. If again 15, 20 years ago, if you were a small business, and let's be honest, more and more people are becoming like single-owned businesses, so that as a community is expanded exponentially in this next generation digital world that Ruben referred to. If you wanted to accept card payments, that was a pretty expensive, task. You were probably hiring a big clunky set of hardware that probably had a 5-year license and rental charges and a whole bunch of fees. Then you had new parties come in and really democratize that. So most people now can, and it's moving that you'll just be able to use your phone as your acceptance device. But companies like Square, PayPal fundamentally revolutionized acceptance and made that available. And as I mentioned earlier, I have been a small business, and the challenges of getting access to financial services. So it's not necessarily about the bells and whistles of the banking product, but just the process of application and onboarding for a small business to have access to those services is a real group. So I think small businesses as a community have been massively affected. And I also think that what we have seen is the unbanked or the underbanked now starting to become, it's viable for them to use their phone as a financial instrument using the wallet services capability. So they don't have to have the same degree of scrutiny. They can get access and then build a credit history and stuff like that, and increasingly get access to more and more services. So I think those would be some of the key groups beyond the kind of traditional consumer that I would call out as being fundamental. The banking has been transformed for them in the last 10 years.
Absolutely. And Vijay, I guess, can we get your perspective, having worked Tide, which is, a business banking proposition? Can you give us your take on that as well?
Yeah. So, like I mentioned, right, Tide's value proposition is just that, right? As Jonathan mentioned. Um, so Tide gives a lot of overlay services which banks cannot just give for these small and medium businesses, just like that. So a lot of the merchants or the members what we have in Tide will also have a bank account with other big players like Barclays and other players in the UK, but still they want to have a Tide account just to use these services, right? Like payrolls, like I mentioned earlier, cards. So we issue a card and we issue multiple cards for these players, right? So I'll give you a use case where, so I'm a small player, right? And then I have a Tide account, and I can issue a small prepaid card to my own players, right? My own company, and I can also control the expenses in that card. So these are things which large banks do offer, but they offer at scale. And these small, medium enterprises needed someone who can, with a low expense, low cost offering. And that's where companies like Tide and Monzo come into picture.
And Fiona, if I could just step back in again, I think the other fundamental difference is historically from banks, these are standalone products that don't really speak to each other. So what we have seen with platforms such as TerraPay and Tide is the ability to link the data relating to those customers. So as an example, if I'm doing the acceptance on behalf of a small business, I can take a very different viewpoint to their credit worthiness and I'm calling them loans, but they may be short-term, buy now, pay later. So you've got much more flexibility and agility to offer more tailored services and components as part of that package. So the choice for a customer to come to one point and have access, not only have access to a range of services, but have tangible benefit because the data deriving from one service is informing another service, compared to the traditional banking experience where those silos just couldn't speak to each other. It's night and day.
Spot on. I think another aspect on the SMEs, if I may add, is that, as an industry, we have been talking for the last 10, 20 years about financial inclusion and digital inclusion. And in most cases, we're talking about individuals. But today, if a small company is not, participating in the digital economy, they are completely excluded from commerce. because the majority of commerce is moving to digital. So there must be an effort to create the proper, easy to consume digital solutions for a small merchants and small companies that can empower them and enable them to really participate in commerce as any major institution today. I think that's a collective effort, the creation of wallets for SMEs, the creation of more easy to consume digital capabilities for them will accelerate not only the domestic GDP, but cross-border. The ability now for a small company to become a multinational company is there if they participate, if they have the right tools to participate in the digital economy. And SMEs are, I mean, a major, I mean, creator of labor and jobs. So it creates a very important circle of value creation for local economies to really digitize these SMEs and allow them to participate globally.
Absolutely. I mean, all the stats show that SMEs are the backbone of the economy. So yes, can totally get that. Ruben, while I have you there, one of the areas that I want the panel to reflect on, and maybe you could start with first, is what do both parties to this bank fintech partnership? What are both parties bringing to the table?
Well, I believe the bank has been historically highly regulated entities, and for the good reason. They need to continue to develop the right condition to protect the consumers, protect the economies for major systemic frauds, etc. And there is an incredible value to have, I mean, the regulatory posture that the bank have. And the assurance that the consumers and the business, capitals are protected in this environment. Historically, the bank has been slow in react to technology changes. Sometimes actually slowed down by the need to comply with, I mean, some regulatory postures. I believe the best way to accelerate your go-to-market or to accelerate the penetration of new products into new segments is to continue to look for this fintech partnership that allows them to quickly develop the right product and the right solutions for new consumers without compromising the solid security environment in which the bank operates. I think it's a win-win. There is a large opportunity for value creation between the banking sector and new technologies and new fintech. And if you have the right conditions, the technology orchestration to integrate more and more solutions from your fintech partners, that creates an important competitive advantage for the bank.
Yep. So accelerating the bank's go to market and opening up new markets as well. Yep. Jonathan, do you want to provide some comment on that?
Yeah, I completely agree. I think, over time, if you look at who does what well, okay, I think that there's a clear delineation where banks do that underlying governance, scrutiny, regulation, fraud management exceptionally well, and they do it at scale. What they've, and this is not trying to slam banks, because I think because of that regulatory scrutiny and all that, that can create something of an anchor that makes it hard to be as reactive as some of the fintechs. But I think but I don't think what they have historically done particularly well is things like UX, and they tend to need to build one size fits all because their business model is based on scale. They're not doing niche services. And so I think what we will start to see is more of a kind of stack where the banks are providing a lot of those underlying services, but allowing the fintechs to provide that degree of specialization, digitization, agility that they've really struggled to. So I think there probably will be more of a coexistence over time. And so I think you can then see that kind of banks bring scale and governance, and fintechs bring that user experience and that degree of nicheness. Sorry, I don't think that's a word, but where, you know, what we're seeing is things become very focused on the best experience for certain tasks. They're not as general as a traditional consumer banking prop and stuff like that. So that's where I think we're going to see hopefully see more and more evolution. I think the banks have struggled a little bit with it because of their processes are almost designed to be walled gardens. But I think that those gates are opening up, and we will see more and more flexibility going forward.
And I'd like to talk about those walls in just 1 minute. But before we do, Vijay, do you have any comments on what both parties are bringing to the table in bank fintech partnerships?
Oh yeah, so bank and fintechs go hand in hand, right? PayPal, I'll talk a lot about PayPal. In this scenario, PayPal's KYC was dependent on banks for a long period of time. And then before we could figure out an alternate method. Um, I'll also give another use case, open banking. And to Ruben's point, how the regulators suddenly threw this. And one of my colleagues in PayPal always used to say that Europe doesn't innovate, fintechs and banks don't innovate, the regulators innovate. Outside of Europe, individuals innovate, right? And that was so true in case of open banking. So Klarna, I'm sure a lot of people in this panel know, they first innovated, they started scraping bank accounts and figuring out how to get the customers' data to offer credit, to offer short-term credit. And then regulators made a note of it, and then they created a new regulation around that, and that's open banking, right? And then open banking has opened the floodgates even further on the partnership between fintechs and banks. And I know PayPal used to connect banks to their wallet through open banking. That gives a lot of data, as Jonathan pointed out. The data has just, the and what this data enables is PayPal can know more about the customer, and we can give more to the customer, right? If the customer wants credit, we give that. The customer wants credit card, the fintechs can give that. So I think it goes both ways. And on the other side, banks also thrive, right? Cross-border business, I think we spoke a lot about it. Without banks, cross-border business for fintechs is not happening, right? They need a bank to do. So yeah, I think this partnership is here to stay for a long period of time. What I feel it will do is either the banks will go and buy a fintech if they feel that that fintech is disrupting them, or they will have to closely partner with them. I think both will have a very strong role to play in the market. It has been happening in the last 5-10 years, and I think in the future as well, it's going to get even more stronger.
Good. Ruben, I'm going to open that one up to you as well.
Yeah, we believe that collaboration will definitely become a competitive advantage. Whoever is out there trying to understand the best way to quickly go to market or to test, new technologies and create the condition to actively collaborate and accelerate partnerships and so on, it will definitely be a formidable competitor in any market they choose to compete. Because at the end of the day, nobody has all the capabilities, all the skills, all the functionalities to serve this new consumer. And the faster you move in adopting new technologies, the faster you move in quickly developing solutions for this new consumer in mind, the better you will be in keeping your relevance in the marketplace.
Okay, I think we get the benefits there, clear licensing to enable cross-border transactions, technology to open up new markets, analytics, which you referred to, Vijay. I now want to ask you guys about the potential barriers or challenges with banks and fintechs working together. And Jonathan, you kind of referred to banks almost having an anchor around them. Are we thinking compliance, security? Can you talk to us about that anchor?
Yeah, I think it's twofold. I think the challenge has been, because they're on the hook for so much, they've tended to want to contain everything, and they have a lot of sensitivity that, many of these platforms have been around for quite some time, and they don't want to create any systemic risk. So there is an understandable tension. There is also, I think, a bit of a kind of, they have built huge technology shops. And so what you'll often get is a clash between, well, no, a history of, we always build it in-house. Why would we go out? Why would we go outside for that? And that can be problematic. I also think culturally, the way that the processes that they go through often make it really challenging and time consuming for a fintech to meet those requirements. And so you just have fundamentally different risk appetites and an approach to risk on either side of that fence. And so, if you look at the sales cycle, if you look at the kind of operational overhead that comes with meeting those requirements and being compliant, it can really increase the cost and just make it kind of too hard to work with that bank. So I think a lot of it is cultural and procedural in the way that they approach the world is very, very different. And I'm not talking about agile versus waterfall or any of that platitudes. I'm just talking, it's fundamentally different the way they think and see the world from a commercialization standpoint and things like procurement processes. So, so those can be, someone who works for, you will make a judgment call to, the deal may be really attractive, but the cost of and the effort required to apply and the like, all these things will affect how one prioritizes which deals a fintech can go after and how many they can balance. And so I think that is a serious consideration that banks, even when they want to innovate, sometimes struggle. I think it's improving, but I still don't think it's as far as it needs to be to really be able to almost contain that risk and do what you need to do to innovate. It's either live or it's not live. It's problematic.
So there's a whole variety of concerns there. Ruben, I'd like to come to you now. How you might solve some of those concerns that banks have and help get the deal over the line.
I think what is important is to align since the very beginning in the value creation and the business model. Sometimes we fall in love with the technology, we fall in love with the company, but there is a basic misalignment, as Jonathan was saying, in the risk posture, the risk appetite, and what we consider the minimums of value creation. And without having this basic alignment, you may have the technology, you may have all the good intentions to build the partnership, you may have all the condition and all the team to do it and the methods to do it. But if you are not really aligned in how revenue will be generated, down the line, these are very unsuccessful initiatives and very unsuccessful partnerships. The most successful partnership you see out there in terms of fintechs and the banking institutions are those that, there is a clear way for the bank to close any competitive gap by doing this partnership. There is a clear opportunity for both parties to create collectively or together a more competitive advantage. There is a real value proposition that comes as a result of this collaboration. If it's not under those conditions, it's very difficult for a partnership to succeed. And so I will say sometimes you want to take the technology team and the legal team out of the table and just to talk about where is the revenue, and then bring them back and say, okay, so this is the purpose of this partnership. This is what we want to create together in favor of this client, in favor of this consumer, and then bring the technology to talk. And then sometimes we start by the technology and we're trying to find what is the problem that we want to solve up there, instead of starting with the problem statement, totally starting with the client and the consumer, and then bring all the capabilities that you need to solve for this specific pain point. And it's not the other way around. No, that's what we're learning in TerraPay.
Very solid advice. Identify the problem and build a solid business case first. Absolutely. Vijay, can I bring it over to you as well?
Yeah, I mean, I don't have too much to add. I think Jonathan and Ruben have covered most of the points, but I'm going to actually summarize, and some of the points which they said is revenue. I heard is very important for fintechs, right? Banks can hide, right? The digital arm of the banks can still hide behind other businesses, even if they fail, right? Fintechs cannot do that. They'll have to prioritize. That's another point which Jonathan and Ruben alluded to. Prioritization becomes so key for fintechs to, grow on a yearly basis. And everyone, if they are not a public company, the investors are having a close watch on them. If they are a public company, the investors are having a very close watch on them, because that's their only business. So they'll have to focus so much on it. So in revenue and prioritization are so good. And how the fintechs are operating in this, again, they mentioned this already, the agility, right? So what fintechs can do, some of the things banks cannot do, and it's practical, right? So banks have so many systems to take care of. So if I'm going to use cases, if I give requirements to my engineers, the engineers are only going to focus on that particular product. He doesn't have to worry about other systems. But if I go to a bank, there are 10 different domains they'll have to take care, and by the time they finish the simple solution, a 3-page solution, it's going to take more than a year. So that's the fundamental difficulty which the banks face. And that's where I feel that this partnership between banks and fintechs are here to stay. I'll leave you guys with this, right? Fintechs needs banks stability and cash, right? And then banks need fintechs innovation. I think as long as this difference is there, I guess that partnership will be here as well.
Very apt summary there, Vijay. Thank you very much. I guess before I open up the conversation to the audience for some Q&A, are there any closing thoughts from our panelists?
I just think it's exciting times we live in. And I think what I would say to follow on from that conversation is, certainly when I was first working in innovation, there was a lot of perception that this was just going to go away, because on the internet, what you'd seen was lots of kind of .com bubbles, and they'd kind of burst. And I think there was a belief that this was not that the mobile device was not as game changing as it has proven to be. So I think what is fundamentally different is an increasing awareness that starting to build out these capabilities is not optional now. I think even banks would realize this is not something that if we just maintain it, the competition will go away and we'll still be standing. I think there's a realization that there has to be more cooperation and collaboration. So I think a lot of those partnerships are much better structured, much better intended than they probably were, 5-10 years ago.
Okay, Jonathan, Ruben.
I agree, Fiona. I think the point is that there is a large opportunity for creating additional revenues for both the banking and the fintech ecosystem. No? There are underserved consumers out there. There are segments that require more digital capabilities and digital solutions. And there is an opportunity to create value together. The question is, do we have, and we are on purpose creating the right conditions to allow this collaboration to flourish, both from the mindset of, building more and more partnership, and for the technology architecture that the bank have to accelerate the adoption of new and more technologies. The trend and the roadmap for, even more disruptive technology is there. Generative AI, more wallets, a smart ecosystem, you name it. We are just at the beginning of a massive change in the way the banking ecosystem and banking technology operate today. And the sooner we start, getting into the trend, the better will be for our shareholders and for our consumers.
Absolutely. I think we're just at the start of this journey towards digitization and payments. Absolutely. Well, thank you so much to our panelists for answering my questions. I'm now going to open it up to some questions from the audience. So we have a question in here about how do you handle compliance checks, things like sanctions checks in cross-border transactions? Does someone want to take that one?
Well, in the case of TerraPay, we are, a regulated, company with more than 31 licenses around the world. And we generally work with, other regulated entities that are approved to manage cross-border money movement or cross-border transactions. And, everybody in each of the leg of the transaction is responsible to run the proper AML, KYC, and some other sanction screening processes. We do it ourselves. We share data. We share all the necessary tools that allow us to comply with all the checks that the regulators are requiring in every jurisdiction.
And you can share that information with the bank partners as well.
Yes, and there is an exchange based on what is available to share with the send partner or the receive partner. We share the data for them to complete their own sanction screening and some other processes.
Great, thank you very much. That helps. I have another question here. How can fintech partnerships contribute to reducing operational costs and increasing efficiency?
I'll let Jonathan to get that.
Yeah, so I think one of the great things about these services is if you look at it, generally the cost to run is significantly cheaper. The cost to add features and new services is significantly cheaper and significantly faster. So I think there are clear efficiencies there to be had. I think the challenge that you often find, I'll give you a tangible example. I talked about a lot of things, most things today are taking place through a digital wallet, through an app. Well, if you then try and add the burden of, okay, but we've got to have branch access and we've got to do this on the web. So I think one of the challenges is you create restrictions or conditions on the service that fundamentally remove everything that has kind of helped provide that cost efficiency in the first place. And so that's part of when I talked about the cultural difference earlier. I think it's really important. There are clear benefits to be had in the delivery capabilities of these fintechs organizations. If you look, and that's not just in the transaction itself, it's in things like credit checking processes, client vetting process, all of those things. I think there's significant cost benefit to be had, but making sure, to Ruben's point, that earlier point, that you recognize this is a business, and that in order to achieve those margins and those targets, There are probably some sacred cows in the way that you see your delivery processes that probably need to be reconsidered, and some choices that need to be made when making those decisions.
Yeah, totally agree, Jonathan. A big portion of the operating costs of the financial institution is all these call centers and all these, servicing lines, no? The question is, if you are going to serve a consumer from more digital platforms, how you're going to reduce your cost to serve when you are designing a completely new, servicing architecture that doesn't require, when you call the bank, you're saying yes, and in option number 20, talk to a representative. How you're going to create, chatbots, group messaging systems, and other secure, communication channels that can fit directly in the phone without calling, these massive call centers that are still operating and generating significant costs for the financial institutions. So that's an area of, I believe, collaboration, and that's a purpose, no? How, by working together, can we reduce the cost to serve and increase the satisfaction of the user experience? There you have a problem to solve, and then you start thinking, okay, how this will impact my P&L? How can I share, part of this, new revenue generating activity or cost saving activity in a way that by applying this technology and by consuming this technology from the fintech, I can improve my P&L, and I can also improve the P&L of the fintech,
Yes. Well, thank you for that, Jonathan and Ruben. I think we've got time for maybe one or two quick questions. So we have a question here about the potential use of AI in cross-border transactions. Who would like to take that one?
Okay.
Vijay?
I believe there is a lot of, go ahead, Vijay.
Go for it, Ruben.
No, I believe there are a lot of opportunities to improve liquidity, treasury, and other, money movement activity inside the institutions, by using AI. No, the possibility to predict when these funds are required in any given market, and manage your bank account networks, based on AI and better predictive models. I think that will accelerate funding across borders. No.
Vijay, do you have a minute just very quickly to give us your take?
Sure. I mean, AI traditionally, typically already being used in fintechs and machine learning for credit offering, big time, right? It's already happening today. So that's what AI has been used for. For cross-border, I don't know. I've not come across a use case right now. Maybe you can predict the next 5 days transaction FX, and then you can time it or hedge your FX. But we'll have to think about it.
Okay, and one last quick question. Ruben, I think I'm going to throw this one open to you. So banks are often risk averse, slow to adopt new technologies, and have slow sales cycles, plus procurement, all the things we discussed earlier. Fintechs often need to move quick. How do young fintechs best manage that process?
I believe you need to develop the confidence to work, closely with the banking institution and demonstrate your case. I think there is a natural sort of reservation in the bank side because of all the regulatory components. And by educating, if you are a young fintech, you need to educate yourself on all the compliance, all the regulatory conditions in which the banks operate. So you start speaking the same language and understanding why that risk aversion exists. There is always a reason for all those situations. But as a fintech, we also need to do our homework. It's not always about the UX and the UI. There is a lot of, important aspect of running this business that has to be regulated in many ways. So it's It's building your own confidence and your own acumen of how a bank operates that will create a better relationship, I guess.
I'm going to be a bit cheeky if I could. I think having worked with a lot of fintechs, they're often built by engineers who think that everything is an engineering problem. Then the risk that you think it just sells itself because it's better technology. Well, of course it's better. Why wouldn't they buy it? But I would argue that you need dedicated banking salespeople because a banking sale, from my experience, is fundamentally different to a fintech sale. It requires a completely different culture and approach. And the risk is if you go in not recognizing those differences and thinking the technology just sells itself, you will fail.
Enterprise sales, a whole different ballgame.
Yeah.
Okay. Thank you very much to our panel and the audience. We are almost out of time. So yes, thank you again to our speakers. What an insightful session we just had. Thank you to the audience for attending today. If you have any questions, please feel free to contact Orlana Morris at thepaymentAssociation.org. After the webinar, you'll receive a survey. It would be great if you could complete this and provide your feedback. It helps us improve webinars. You'll also receive a follow-up email within 24 to 48 hours with a link to the recording of today's webinar. So keep an eye out for that. And on behalf of the Payments Association and our panelists, thank you so much for joining us for this informative discussion, and have a great day.
Thank you, everyone.
Thank you, everyone.